Soundhound AI released their quarterly figures on Thursday after the market closed. Now the thing is that during the day the stock went up 21% already. So right now, yes, the stock is down 2.3%. The quarter was a double beat. The company is still losing money. They did also announce before they reported their quarterly figures, they did announce the acquisition of a new company called Amelia AI. So maybe that's one of the reasons why you've seen the stock go up 21% on Thursday, but then after hours, it's down 2.3%. Right now, it's a company that has a market cap of around $1.5, $1.6 billion or so. Year to date has performed extremely well. Of course, we covered this company here under $2. Then the unthinkable happened. It went, I think, close to $10 or so. So those of you that have traded it for the short term, congratulations. You've made quite a lot of money. Still, it's up 145%. Now, my biggest issue with Soundhound is not the company, it's the stock. Because the company could be doing extremely well. It's growing, that's fine. The problem here is the stock market and the stock. The fact that this is a company that generates this year, let's say $80 million in revenue, but has a market cap of $1.71 billion, in this case a bit less right now, it does not make a lot of sense, right? This is a very, very high multiple that it gets. Again, could be a good company, but valuation-wise, it does not make sense. It's great for trading. I've traded a couple of times, won some, lost some. It's great for trading, but if you want to be a long-term shareholder, you have to take all of that into consideration because you can be extremely bullish on the company, and that's fine, right? AI stuff, investment by NVIDIA quite a while ago, although, what is it, a couple of millions of dollars for them? That's really not much. Soundhound is acquiring companies, I think now each and every quarter. So they're making use of their cash plus the momentum right now. They're acquiring revenues as well. But as you will see, you as a shareholder, you are getting diluted quite a lot each and every year. So we're going to go over everything that happened. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, would really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So let's start with the acquisition. So Soundhound AI acquires Amelia, significantly expanding its scale and reach in conversational AI across new verticals and hundreds of enterprise brands. So the purchase price will be $80 million in cash and equity with partial payment and assumption of Amelia's debt, as well as future earnout potential aligned to revenue milestone achievements. Combined revenue in 2025 is expected to exceed $150 million, with Amelia contributing over $45 million. So take that into consideration whenever you see those headlines that, well, oh, revenue for 2025 suddenly went from 100 million or something like that to 150 million. Yeah, that's because they acquired that extra revenue. The transaction is expected to be accretive to Soundhound earnings in the second half of 2025, with meaningful revenue and cost synergies driving growth and profitability expansion in subsequent years. As you know, with regards to acquisitions, it does take some time for all the things to work together, teams, products, software, and so on and so forth. At closing, the combined company holds approximately $160 million of cash and $39 million of debt. Now, you know, this is an acquisition that will help Soundhound with its pillar 2. Pillar 1 is automotive, pillar 2 is more restaurants, pillar 3 is the monetization. This acquisition will definitely help them with all of this. Now, there is a question that maybe some of you might answer. Soundhound is paying $80 million, right, for Amelia. Amelia did raise at least $189 million not so long ago, well, over a year ago. So they raised close to $200 million, and yet now they are getting sold for less than $100 million. That's quite something. Now, they do have some big clients. Apparently, it's BNP Paribas, the pharma company Teva, and Fujitsu. So that's quite something. Soundhound said that the two will together have some 200 customers, including big banks and Fortune 500 companies. And I believe they also said something about signing one of the big pizza brands around the world. So that's also a big positive. Now let's have a look at what has happened this quarter. Revenue did increase 54% year over year. GAAP gross profit increased 23% year over year. GAAP gross margin decreased 16.1 percentage points. Non-GAAP gross profit is up 28%, but then non-GAAP gross margin down 13.5 percentage points. GAAP operating loss increase of 33%, non-GAAP adjusted EBITDA an increase of 37%, GAAP net loss increased 60% year over year, non-GAAP net loss did decrease 8%, so that's a good one. GAAP net loss per share, same thing, 11 cents. Non-GAAP net loss per share of 4 cents compared to 7 cents, so a 3-cent improvement. Now, like I said at the start of this video, the big problem here is it's fine. You're growing revenue 54% year over year. You're acquiring more revenues through acquisitions. But you as a shareholder, you get diluted here. 50% a year. That's not great. So you definitely have to keep an eye on that. As for a couple of extra things, so cumulative subscription and bookings backlog customer metric was $723 million and roughly doubled year over year. I believe last quarter was 660, 670 or something like that. So nice increase quarter over quarter as well. But the thing with that metric here, as we've spoken about that quite a couple of times, especially the subscription backlog. So that refers to potential revenue achievable for the company with current customers where the company is the leading or exclusive provider, and assuming a 4-year ramp up during which time our technologies are being implemented, and assuming a successful rollout of our technologies over a total 5-year duration. So it could very well be that that potential revenue will never actually come into the books. This is potential revenue achievable for the company. You have to definitely take that into consideration. This is a metric that is very, very misleading. Then they continue by saying here annual run rate of over 5 billion queries, second quarter up approximately 90% year over year. Prepaid $100 million debt in the quarter, saving over $55 million in interest and fees over the remaining life of the loan. That's very, very good, especially for a company that is burning cash. If you can save $55 million, that's quite a lot. They did also announce a couple of extra things here on their press release. I'm not going to go over all of them. So this was the pizza thing. So signed one of the largest pizza chains in the world on an AI roadmap to introduce Soundhound's phone ordering services to thousands of stores. With regards to automotive, we've talked about that already during the quarter. The launch of Stellantis. So in partnership with Stellantis, Soundhound has signed a new contract to provide the voice assistant for 3 of their brands in Latin America. And a couple of other things here with Peugeot, Vauxhall, Opel, Citroën, Alfa Romeo all went into full production with Soundhound Chat AI across multiple markets and languages. In total, 6 Stellantis brands are now in production with Soundhound's voice assistant with generative AI. So a couple of announcements for the quarter. That's basically everything that has happened right now. And so looking at the graph, we got a big rebound here on the 200-day moving average in the last couple of days. So that's a good sign. We also rebounded in the past here in June and in April of 2024, all rebounds around that 200-day moving average. So if you're trading, definitely use those things. Right now, of course, with the huge jump on Thursday, 21%, we were back over the 20 and the 50-day moving average. We're now at $5.09, which is still over all of those moving averages. So if we can stay now above that 20-day one, which sits at $4.79, and try and make a base, RSI still going to be neutral. So that's quite good. Again, it's a stock that is quite volatile, right? This is on the weekly. You can see ups and downs, but at least it does respect that 200-day moving average. So overall for the quarter, it was a good quarter, all things considered, but I will keep saying the same thing over and over again, even though some of you might not like it. It is an extremely expensive stock. It is acquiring its revenue. So it's not really organic growth that's only, oh, it's a 50% increase for 2025. Yes, it is. But it's because they acquired another company. So the core business, that's what you need to look at. This is the core business. Can it grow without having to acquire more and more companies, without having to dilute shareholders 50% year after year after year? And then let's see if they will need to raise more cash for more acquisitions. Again, acquisitions is not a bad thing, right? Sometimes you can find good deals. But at the end of the day, if the business itself, the core business, cannot grow without acquisitions, then what's the point? So that's about it for this video. Do share your thoughts down in the comment section below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.